Good morning, this is Wayne Blau with another smart profit maximizing moment. On Saturday, President Trump issued 4 executive orders because Congress Congress couldn't reach a deal with him, and things were happening. A lot of it's politics, so I'm not going to get into it. There's plenty of articles out there, and if you want me to discuss politics, give me a ring. Anyways, that's neither here nor there. There is one thing though, which is the payroll tax deferral. What are we talking about? We're not talking about federal withholding. We're talking about Social Security and maybe Medicare. I've read, and I've learned. I went back and read it. I've learned to actually wait until the IRS puts out their readings, and I'm waiting for more information. But some things that came to mind right away, and I've been reading some of this already, is the problems it causes for employers. So what's going to happen? September 1st. You have payroll taxes are going to be deferred until the end of the year. President Trump says if he wins, he's going to try to get it permanent deferral. No guarantee of that, so let's just assume it's not going to happen. I strongly believe we need to plan on what's in law right now. Okay. So what we're talking about, remember, Social Security is 6.2% of the employees' wages up to about $137,000, which the employer matches. So there's really 12.4%. Medicare is 1.45%, which added to the 6.2 means we're taking 7.65% out of every employee's check up to that max. Medicare is unlimited, and matching it with the employer. So what's the problem? Well, it's a deferral. It means it needs to be repaid. We're not sure how that's going to happen. Is that going to be the employer's job to deduct it from checks over a period of time? We're waiting for guidance. Is it going to be the employee's problem and it's reported on their tax return? We don't really know. Okay. But what we do know is starting September 1st, you're basically getting both the employee and the employer are getting what's basically a 0% interest loan that's going to be payable at some point in the future. So what's the problems? Well, 2 problems. All right. The first one is failure to pay employer taxes is the number one reason I'd say 8 out of 10 people I send to bankruptcy court judges and to bankruptcy attorneys are payroll tax related. Okay, it's that simple. So it makes me nervous to see a deferral of this type. So my first thing, it is going to help because if you're not taking it out of the employee's check, you have it for you to use. Okay, so it is a 0% interest loan. But that could add up pretty fast. And now remember, it's limited to people that make less than $2,000 a week or $104,000 a year. So if their wages are above that, they're not getting a deferral. Technically, the way it's written, it sounds like $100,000 per, income. But, if they work for you and somebody else, how do you know? So you just worry about what you pay is one problem, all right? The second thing is, what do you do? My recommendation has kind of been twofold. One, there's not going to be any interest. There's not going to be any penalties at all for paying it later. That was obvious from what's out there. I'm kind of the opinion that you should, you're not going to take it out of the employee's check. It's simple as that. They expect it, they heard it, they expect they're getting more money. So I would say the employer portion, at least, I'd keep paying. Or at least put it in the bank. Save it, put it in a separate account so that you don't spend it, all right? A secondary problem is, what if an employee quits? How is the repayment going to be made? Is it the employer's job to take it? Okay, there's a check somewhere in January. It hasn't been forgiven. Trump loses or Trump can't get it through the Congress, whatever. And now it needs to be repaid. Is that the employer's job? Are they going to take it out of the last check? Got no idea. I'm not even sure if somebody quits between September 1st and December 31st, whether the employer can legally dock their last check for taxes that weren't paid. Not sure how that's going to happen. Hopefully we'll get some guidance, all right? For sure, I wouldn't stop paying the employer portion. I wouldn't spend it. I'd stick it somewhere or I'd pay it. And, I'd pay the employer portion of the Social Security and Medicare and save the rest in case you have to pay it back. I mean, I'm not sure how to go with this. So let's hope we get a little bit more guidance on this. I'll be honest, it creates a problem. Just be careful and understand it's a deferral, which leads to the third thing. I think you're going to have to, I said two main problems, but I'm going to go with the third and the fourth. Make sure your payroll provider is up to date. Okay. If you're using ADP or Wells Fargo or, third-party QuickBooks, they should have it. Pay attention, kind of do a little bit of research, see what they're telling you, or pick up the phone and ask them how they're approaching it, all right? Because you're going to need to make a mid-year adjustment, which is a pain. Another thing, I think you need to put a memo together to your employees. I'm going to watch what's going on and try to write one for my clients. I'll post it up here, basically saying, hey, this is what's going on. You're going to see an increase in your check, but understand it's basically a loan. At some point, you're going to pay it back. Hopefully by the time, another couple of weeks, a week or so before this first pay check in January, we'll have some guidance on what the heck that is, all right, how the repayment's going to happen. But that's why I'm not writing the letter now. I'm waiting to see. So anyways, as far as that goes, there's a lot going on. You need to be aware of it. I guess to summarize, keep your employees informed. Make sure they understand. Kind of come up with a plan for what you're going to do if somebody quits in between. Are you going to dock their last paycheck? Maybe there isn't enough. How is that going to be handled? And then try not to fall behind on payroll taxes. I'm kind of guessing that they'll give us some time, sort of like the deferral that's happening, that's in the CARES Act, where you have some time over, part of it in 1 year, part of it in the next. I'm thinking that's what will happen. But right now we don't know. But I'm just giving you a heads up, and there are some problems for employers, and I'll keep you in the loop. Until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.